Hey, all right, it looks like we're going live. Welcome to the market forecast, ladies and gentlemen, for Thursday, October the 1st. I'm John Hoagland. Thanks for trusting me with your time. As always, we're going to look at these markets in context, always through the lens of risk management. And we have a lot of information due out this morning, already released at 7:30 this morning. The jobless claims, weekly jobless claims numbers came out. Now, they were looking in for the initial jobless claims to be around 850,000. It was a little bit lower than that, 837,000. Continuing jobless claims also dropped a little bit. We're looking for 12,225,000. It came out 11,767,000. Those are good numbers. A little bit of a caveat to that. The last week's numbers were all revised slightly worse. So we have to take that for what it's worth. It's going to take some time for these numbers to digest in the marketplace. We also had personal income and outlays. They were looking for down 2.4%, a little bit worse at down 2.7%. We also have the ISM manufacturing index and construction spending due out at 9 o'clock Central this morning, and 9:30 the nat gas numbers come out. We also have a couple of talking feds throughout the day today, and we have oodles, that's an industry term, oodles of bill, note, and bond announcements. So, or auctions, I should say. As far as other news is concerned, apparently hopes for a stimulus package have risen after a little bit of a scare yesterday that knocked our equities off their highs. There appears to be only a 600 billion difference between the two sides. Mnuchin, Pelosi, come on. What's 600 billion among friends? Let's get something done. Stocks, of course, are back on the rise after losing most of yesterday's gains, of course, aided by stimulus rumors, as well as good earnings released this morning by PepsiCo. Crude prices slide back into balance after a surprise small draw by the EIA yesterday, just under a 2 million barrel draw in crude stocks. VIX down 2.5% as our equities are on the upside today. Trading currently, last time I checked anyway, at 25.73. Dollar index down slightly, continuing its a little bit of a slide off its recent highs, down to 93.57. Make sure you do like, share, comment, question, feedback, and I do enjoy a good heckling. Make sure you subscribe to our YouTube channel so you can get notifications when we do go live. We had a busy day yesterday, forecast. We had Michael Patak speaking. We had the group coaching session. We had the webinar, the last of the series of 4 webinars for back to school, back to trading. Hopefully you were able to see some or all of that, and hopefully it's going to make a difference in your overall performance. That's the goal here. I always want to say good morning to everybody, and well, we have a lot of discussion and good mornings this morning. I just love to see that. I'm here alone with the dog, who's kind of a little restless right now. She does say good morning, however. It makes me feel like I'm not alone when I see all these good mornings and good conversations going on in the chat here. So MSS Capital, good morning. You're the first one here. You win the prize, Fanis. Good to see you. Danielle, guten Tag. Fanis, Danielle, good, hello. Nick Mo, Felix Escobar, good morning, everyone. Thanks for an excellent coaching session and webinar yesterday. I'm glad that you were there, and again, it is my only hope that in some way you were able to take something with you from those sessions and use it to your advantage, of course. Fanis, starting at my combine today. Good luck, Fanis. Remember, risk first. Always think risk first. If the risk is too great, try and get into the trade a little closer to that point of invalidation. Charles, hope you made it back from your jog in time. Charles, Felix, MS, yes, everybody's saying good luck to Fanis. Just manage that risk. Best advice is what MS Capital said. Staying patient is everything in combine and trading in general. Absolutely. I think I sometimes say stay patient a little bit too much during the forecast and sometimes on the recap, but it is so important to remember to stay patient. Good morning, my brother Rick. I love you. Fanis, Dan, everybody still talking to Fanis? Felix, yes, that is my brother. He is he is my man. Charles March. I don't know if I said hello to you. Rob T. Manny. Um, Esteban. Tonya, good morning. Good morning. Subconscious. LT, good morning. Alan. Miguel, excellent. I'm glad that you enjoyed it. It's all for you. Sarah, good morning. The bond picks. Yeah. I'm working on repairing some of them, and I'm going to be putting them up shortly. So you should probably see them next week. My brother gave me these pictures of the bond pick, and when you see them, I think you're really going to enjoy taking a good look at them. Maybe we'll have a talk about that. Get Rick on here, and we can talk about his days in the 30-year bond pit. It was such a big monster of a pit. It was always kind of scary to me. Yeah, level 2 of the Japan exchange closed down last night. I did hear about that. I haven't had the opportunity to really look into what happened, but that's kind of amazing. Mike, good to see you. Troy, Jason, Nick Mo. Yeah, one of the younger brothers. That's right. That means he's older than me. All right. Well, if I missed you, I'm sorry. There was a long list of folks here today, and I really do appreciate everybody saying good morning. And of course, good luck to our new participants in the trading combine. We're looking forward to seeing your success. Okay, I've got some stable charts this morning. I apparently have scared away the gremlin that had been plaguing me for the last couple of days. I think we're going to be okay. Let's jump into the charts and see what we're seeing here this morning. Lots to do today, lots of information, lots of possibilities. I'm going to say it again. Stay patient and trade what you see. Okay. So the lockdown scares that happened a couple of days ago, I'm thinking that was probably Tuesday, knocked this market out of this balance area, out of this coiling area, I should say. But now it seems that we've just been kind of pushed back into it. So what I'm going to do is I'm going to take these off, and I'm going to look at this more as a area of balance instead of a energy building area. So I'm just going to put a little box around this area here, and that's going to be kind of the extremes of where I'm going to be watching for longer, stronger traders to come into the marketplace. We still have our weekly kickoff high at 41.20 and low at 37.50. We haven't approached either of those. Maybe they were a little bit far apart, but I think that these are the important levels that our longer time frame traders are looking at. So prices lower on Monday, volume and open interest increased yesterday on the way back up. We had 700 of it. We had a 20,000 increase in open interest on the down day before. So we may have trapped some shorts here that may be looking to probably get out. Maybe some of them yesterday. Price has returned to balance. So volume was a little bit lower yesterday. Open interest change was a little bit lower yesterday. We didn't get the big push to the downside that we thought maybe we would see the continuation after Tuesday's activity. Remember just to trade what we see. We're back to range and largely short time frame control. What does that mean? It means that our short time frame traders are the ones that are looking at the levels that we are that we're kind of counting on. Now, we've got a little bit of a change here. It looks like our opening range remains the high of the regular trading hour session. That's going to keep me looking to the short side as long as that remains. We were going to be opening inside range and value. That is no longer true. I was going to be looking at value area low as a possible opportunity for an execution. Execution means one way or the other. If we're going to deny or reject value from yesterday, my next opportunity is going to be to value low from the previous day, which was, what day was that? Tuesday. That was our big down day. So really this market is searching for value, for price discovery, basically, is what these markets are about. And it has not found an area yet, even though it's in a larger area of balance. So I don't want to fight this move to the downside until I find some sort of structure. If we are in short time frame control, that structure is likely to be created in a visual area, an area that shorter time frame traders are looking at. Look at where settlement is. We've got settlement all the way up here at 40.22. We've got a lot of shorts in this market. If we can put some sort of a base to the lows here, we may see a nice turnaround in direction. Again, short time frame levels are what we're looking at. This area here was an area of balance that was rejected to the upside. We are back in this area of balance. This looks like it might be an interesting area to start looking for an execution. I'm thinking more down here towards yesterday's point of control, which is down here at 38.91. So right around 38.90, I'm going to start looking. It's also kind of a target-rich area, as it's relatively close to the low from yesterday's extended or regular trading hour range. So if we have not caught our opening range trade to the downside, try and see if you can find a pullback to get into continuation to the downside, if that is your hypothesis. But if I've missed that, I'm going to try and stay patient, look for opportunities as the day goes on. Obviously, the opening range is the high of the regular trading hour session in our crude oil. Try not to fight that. Try not to pick bottoms. Look for some sort of structure to lean on before taking a position in the opposite direction. We've got a previous weekly kickoff level down here at 38.60 that is more of a minor level, but you can see on Tuesday it found support there. It may find support there again. Looking into our S&Ps, we've got we had kind of a probing and indecisive day yesterday. There was some news that came out in the afternoon that pushed the market back to the downside. So we get kind of a spinning top here. We've got a little bit of indecision in this market, but there was greater volume on the upside, and we did increase open interest by 13,000 contracts yesterday. Tuesday we added 1,600. Yesterday 13,000. So there was some decision making going on in this market yesterday. That decision making seems to be that the news that pushed us back to the downside yesterday has changed. We are now looking at negotiations continuing for some stimulus, and that has boosted our markets. So the levels that I'm looking at here are this 33.80. Everybody is looking at 33.55 is the previous all-time high in the December contract. We've got 33.97 approximately as the previous all-time high for the September contract. These are all visuals that traders are going to be looking at. So right now we seem to be struggling with the previous weekly kickoff level at 33.80. Again, a number that a lot of people are looking at. What is this telling us? What does this mean for day traders today? So we've got settlement up here, which is 33.52. Put that on your charts. We've got a lot of longs overnight here. We've got, again, this is shorter time frame, weaker hands traders accumulating longs overnight, and now they're up against the high from yesterday. They're also up against this 33.80 level that a lot of people are noticing and looking at. So one of two things is likely to happen. It doesn't look like we're going to open with a gap. It looks like we're going to open in range and relatively close to value from yesterday. If we don't see some buyers come into this market and continue this move to the upside for our currently already long short time frame traders, they're going to get out. They're going to bail, and they're going to push price relatively close to, if not all the way back to settlement. Okay, so if we can't accept above 33.80, What does it mean? Well, we're not accepting higher prices. We should possibly push down to lower prices. And that may be an opportunity for us to buy weakness in that regard. However, we have to be patient and wait for that to happen. If it does not, we're going to change our strategy. We have to have a strategy that suits the current market state. So, watching for the open. If the opening range remains the high of the session, that might be the first sign that we may be getting some of our overnight longs a little nervous and pushing the market lower. If we don't catch that move to the downside, it may just mean that we have an opportunity to buy weakness at some point in the trading day today. That's right, level two. That's everybody's job. Is if you're going to be working the edges, you're going to be trading where the real rubber meets the road. Trading in the middle, where everybody wants to trade, is usually not the best idea. Okay, Nasdaq. We held the weekly kickoff high all week long. We started below it. We closed above it. We held it yesterday. 11,368 is another previous weekly kickoff level that we found support at last night. We're seeing continuation to the upside. We keep losing open interest in the Nasdaq, which is a little strange. We've been building open interest in the S&Ps and losing open interest in the Nasdaq. If you guys hear that racket in the background, that's my dog. She has this bone that she likes to pick up and drop on the floor. So I'm going to have a little talk with her after the forecast this morning. Anyways, open interest has been lower 2 days in a row. Lower yesterday, lower the previous day. So there's a little bit of a difference here. Where we've been seeing traders getting out of positions at this level. It's going to be interesting to see how today plays out and how open interest changes tomorrow. Looking into the 30 minutes, now she's chasing her tail. She's a nut. Okay, so settlement is down here, 11,407 quarter. We've got that similar situation, but a little bit different. We've got a lot of overnight longs, shorter, weaker hands longs in this market, but we're going to be opening with a gap in the Nasdaq with relatively good probability. We're only about 12 minutes from the open. If we do open with the gap and we can't close the gap, that's going to tell me that there are still buyers coming into this market, and our short time frame longs may continue to get paid. We have a previous weekly kickoff level up here. I'm going to gray this because it's no longer an extremely important number. So this is a level that I might look for an opportunity for an execution if the market does continue to push to the upside. Again, if the market opens and leaves the opening range at the low of the regular trading hour session, that's going to tell me that our overnight weaker hands longs are nervous and they may bail out. And when they bail out en masse, and maybe we'll get an opportunity to see perhaps an execution at lower prices. If you are of the frame of mind that you want to buy weakness, the overnight inventory unraveling can bring you that opportunity. Not only does it bring you the opportunity for the move to the downside, but it gives you an opportunity to look for a weakness to buy in a strong market. Yeah, I think you're right, Nick. Well, I think Lacey is ready to play catch. All right, gold now, always a fascinating market. We had a drop in open interest last night of 5,400. So maybe some of the longs that didn't catch the bottom here were kind of getting out. There seems to be less and less interest in gold here, at least for the time being. We're centrally located still between weekly kickoff high and weekly kickoff low. Short time frame control seems to be increasing with the drop in open interest last night. We added only 600 on Tuesday, so it seems as though there's a little bit less interest in gold as a tool, at least for right now. Seems the longer players are standing pat. Take a look at the 30-minute. This is the third day in a row that the opening range provided a fantastic very fast opportunity for great profit. Yesterday, the opening range was about a $1,200 per contract move to the upside within 30 minutes. Today, we had another one. Our opening range low, the low of the opening range is, I didn't put it on here, but it's just about right here. It's about 1905.70, I think is what it actually was. And when the opening range was left at the bottom, if you just bought that, put your stop below it, it's about $150 of risk, and it turned out to be about an $800 winner per contract. Again, something we don't want to necessarily fall in love with. The market is already coming off, similar to what it did yesterday. I'm looking for another retest of the opening range or perhaps below. We already know that we have some overnight longs in this market, and if they fail to continue to get fed, we may see that market pull back to lower prices to offer the opportunity to buy gold in a weakness. The euro, price has taken a look last night to test the weekly kickoff high of 117.09. Volume was pretty good yesterday. We lost 3,500 in open interest again, so possibly some of the new longs that got in earlier in the week down here were possibly getting out. That loss in open interest is a little bit of a question in commitment to the upside, I'm afraid. We did take that look at the weekly kickoff high here in the overnight. Take a look here at what we've got going on here. Okay, so again, settlement down here, 117.35.5. Put that on your charts. Got too long, got out. Got too long. Our opening range was initially the low of the regular trading hour session. It did not hold, and that appears to be enough to scare our weaker hands, short time frame traders into getting out of some of those longs. I'm going to be looking for this market to return back to settlement and look for an opportunity as that happens. I don't want to fight this move to the downside. If we find some sort of structure, things turn around, it can always continue to the upside. I would really love to see a test of this weekly kickoff high. In the regular trading hours, I don't get to choose that, so I'm going to have to trade and be patient and just trade what I see here. I don't know what the dog is doing, but I'm going to have to continue. Okay, here is the Japanese yen. We've been saying that this buy divergence might provide some opportunity, and it certainly gave us a little bit of an opportunity to the upside yesterday. This move to the downside on the lower volume has kind of fallen into range. There was an overnight increase in open interest increase, I should say, as well as volume yesterday. We added 1,700 in open interest. Not a huge number, but a pretty decent number for the Japanese yen. We also added 600 on the previous session, so we've got a little bit of an accumulation of positions coming here, and I'm thinking that some of those positions are of course going to be looking for longs due to our volume divergence here. So let's take a quick look at the 30 and then let's get down to business here. Okay, so settlement is up here. On the open, we really didn't have any overnight positioning. Opening inside range and value usually tells me that I'm going to try and stay patient and look for opportunities as the session goes on. And before we just had this push to the downside, our overnight low and our overnight high were value high and low exactly. So this is looking like an interesting area for an execution, even though we're not near any of the major levels. We didn't really necessarily see all the chop here. We didn't necessarily leave the opening range at the high of the session here, but we've got a little bit of of a down move here, and the lows of the previous three sessions may provide a degree of support. Again, I don't like to fight directional moves. So I'm gonna be looking for a very cheap opportunity if I'm gonna step in front of this before there's any real structure in the day time frame that is created today. This dog is crazy. This dog is crazy. All right, so we've got our work cut out for us today. Remember, there is a lot of information, and there is going to probably be more headline risks in the markets for the next couple of days. Don't forget, we have unemployment tomorrow. Now, the unemployment, that monthly unemployment number is really, I think, the gold standard as far as what traders and investors think of the labor market. So, we've had some numbers already out this week. Some of them have been favorable towards a drop in the unemployment rate. We have to, of course, wait and see that. But you remember that a lot of the traders that are in the markets today, some of the longer time frame and medium time frame traders, are going to be positioning themselves for anything that may happen tomorrow with that unemployment that is out of the ordinary. So keep your powder dry if you've had a good week. Hopefully that's going to keep up to our new trading combine members. Trade carefully. Just follow what you were doing. If you were doing well in sim, there's no reason to change that. It is going to make it more difficult because you do have a little bit of that skin in the game. It's going to make it a little bit more difficult to make those hard trading decisions. Go easy on yourself. This is a process. It is a marathon. It is not a sprint. I'm looking forward to your success. And let's take our deep breath. Humble, grateful, creative, patient, and what's another one? Take your dog for a walk. There you go. Looking forward to a good trading day. Dan will be back with you on the market recap today at 3 o'clock. Looking forward to seeing you there. Get out there, profit, trade well today, and I'll see you tomorrow.